Hi everybody, James Blacklaw's JB Commercial Finance here. I promised this in previous YouTube channels that I would do a video about the new government recovery loan scheme. What do you need to know about this scheme if you are thinking of applying? So this scheme was announced as the successor to the CBILS and the Bounce Back Loan Scheme. They both ended at the end of March 2021. This new scheme has launched on the 6th of April 2021. Initially to run until the end of the year, but obviously, as with the other loan schemes, it is subject to change. There is no minimum turnover threshold, and there is no requirement for the turnover to have a certain percentage of the loan amount against it, unlike the bounce back loan scheme and the CBILS loan scheme. So it's entirely dependent on the profitability and viability of the business. So, for instance, if you have a business that turns over £1 million, you're not restricted to borrow 25% of that as you were under the other schemes. You can borrow more, less, depending on whether the business can afford it or not. If you have a bounce back loan or a CBILS loan, you can keep those facilities and still apply for this scheme. There are 18 accredited lenders for the scheme currently. That will go up and up and up as the CBILS loan scheme did, and I suspect it will be several times that by the time the scheme is fully established over the upcoming weeks. With regard to applying, you can apply to any provider currently on the panel. Clearly, each lender has yet to send out their individual scribes for this, so you could do that with the CBILS loan scheme as well, but each lender initially only took applications from their existing clients. And I suspect this may be the same. We don't know as yet. To apply, you need to show you've been affected by COVID, but you need to show that you're viable going forward. That's the key difference between this scheme and the bounce back loan scheme, where there is no assessment of viability going forward. So you will highly likely have to produce things like management accounts, cash flow forecasts, etc., to show that you can sustain the loan going forward, because interest and capital is payable on day one, unlike the other schemes where you had a year's grace. Also, there will be arrangement fees to apply. We don't know how that's going to work yet, but standard bank lending is anywhere between 1% and 3% of the loan balance as an arrangement fee up front. This is likely to be very similar along commercial terms. With regard to security, any loan under £250,000 has no personal guarantees. We're yet to see with sole traders how this is going to work, because obviously with the bounce back loan and the CBILS loan, sole traders and partnerships were liable for the debt by the very nature of being sole traders or partnerships. We're not sure how that's going to work here with this scheme. I suspect it will be the same. But above £250,000 for limited companies, there will be likely to be an element of guarantee required. It'll probably be capped at 20%. The 20% comes from the fact that the loans are 80% guaranteed by the government to the lender. Unlike the bounce back loan, which was 100%, this is more aligned with the CBILS loan, which was also 80%, and also similar to the old EFG scheme, which was generally at 75%. We expect it to work along the same sort of routes there. The minimum loan you can borrow, £25,000 and one, anything up to £10 million. And if you have companies in different groups, each of them can borrow up to £10 million. So if you've got a company A, they can borrow 10 million. If you've got company B, separate legal entity, that can also potentially borrow £10 million. Obviously apply for £10 million. No security is to be taken. Personal security is to be taken for under £250,000 or under this scheme, and no primary residence is to be taken at all as security for any of these loans at all. Again, that's something very similar to the old EFG loan scheme. So that pretty much summarizes every key point. If you think you want to apply for this scheme, my first point of call would be your bank. Go to them initially, but make sure you are equipped with your financial information up to date. Make sure you're equipped with forecasts, cash flow forecasts, and business plans for you actually going to want to spend the money on. Because if you haven't got that information, they're probably going to send you on your way to get it. Credit checks will be required. So if you've got defaults in the past, they're probably going to struggle to accept you, albeit talk to your individual lender. The role of fintech lenders and alternative lenders will be key, as it was under the previous schemes. The fintech lenders ended up taking almost half CBILS loan schemes in the marketplace once they finally got on board with it. So a massive chunk of it. None of them are on board at this moment in time, because most of them have got to clear off their backlog of the CBILS loans first before they bring in the new system for the recovery loan scheme. That will come. Brokers like myself are likely to be involved. We've had all our training on this particular product already via our trade body. How that's going to work exactly with the lenders, we're not entirely sure, because the majority of our business is done with the fintech and industrial and alternative lenders, but you will be able to work with us. We are allowed to charge a small fee, which we weren't allowed to do under the CBILS loan and the bounce back loan scheme. But clearly we'll have to justify our value there, those of us who decide to actually contribute towards this scheme and help clients with it. The maximum interest rate, which includes, and the reason I brought it in now is because if we do charge a fee, this has to be taken into consideration. So the maximum interest rate that can be charged when including fees, etc., all on top, is 14.99%, which does sound quite high. I expect most lenders to pitch this lower, probably in line with CBILS, which is anywhere between 3 and 12% generally. I don't expect there'll be too many 14.99s, but the British Business Bank have put that maximum in there just so people are aware of it. So I think that's just about everything. Brokers will be involved in the process. They were involved in around about a quarter of all CBILS loans in the end. So I'm more than happy to help people. Haven't made a full decision yet whether I'll be directly involved in actually helping clients apply for it. But I'm obviously, as always, happy to help anywhere I can. And I'll be updating my YouTube channel and social media platforms as and when more information, new lenders are brought on panel, etc., for this loan scheme. I hope that's helpful for some people. Take care, everyone.